Let's do it. Welcome back to the show. This is NYSE Live. The Dow Jones and S&P 500 coming off record highs ahead of another busy trading week here on Wall Street. Inflation, retail sales data, and the start of earnings season. We love this time of the quarter, as several NYSE-listed big banking giants are set to report their quarterly figures. The great Tom Hayes joins me now here in studio. Tom, a friend of ours here at the Exchange, chairman and managing member at Great Hill Capital. All right, Tom, well, we had expectations this week would bring one set of storylines, and then last night we got a lot more. Federal prosecutors are said to have opened an investigation into Jerome Powell. Your reaction?
From a market standpoint, I'm not terribly happy. But if you back out and you say, look, number one, $2.5 billion of taxpayers' money, $600 million over budget. They have some luxury features on this that maybe they don't need. He lied about it under oath. Okay, that's not an allegation that actually happened. So if he wasn't Fed chairman, should we let it slide? Can you just lie under oath and it's okay? The problem is he is Fed chair, so it does appear political, which makes the market unhappy. You see the dollar low, you see indices lower. So we'll see how it resolves. But on balance, the market's not going to like it until we get a little bit more clarity.
There's so much of this we don't know. Has your expectation even before this weekend been Powell would stay on for a different role at the Fed, which he still is able to do after his chairmanship ends?
My expectation was that he was going to go off into the sunset quietly. This might provoke him, assuming that he's not charged, which we don't know yet, to stay on a lot longer as kind of retribution for their political persecution, I guess, or the perceived political persecution. That's the way it's being framed. Again, if he wasn't Fed chair and he lied about $600 million of your and my taxpayer money, should he get away with it? And the answer is most people would say probably not. We should at least have a trial and find out what happened, what was true, what wasn't true. But in the meantime, markets are shoot first, ask questions later.
It is a midterm election year. What do we typically see in the four-year cycle for equities when this happens?
All right. On balance, subdued returns. And you've known me for a while. I've been a raging bull for 3 years. We have more modest expectations. Since 1948, the average return for the NASDAQ in a midterm election year is negative 0.5%, S&P 4.6%, Dow 5.2%. Year tends to start off okay. The market should hold up through April. Then you get the real weakness into the election from kind of May through the election and finish out strong. But I think for many people who are overweight passive indices, which is AKA the Mag 7 and the top 10 weights, they are going to be underwhelmed with their performance and they need to buckle up buttercup. They're going to see a little volatility this year. I think for those who are a little bit more adventurous and do work on individual stocks, the remaining 493, unmagnificent 497, I think fortunes are going to be made under the surface. I think there are going to be dozens upon dozens of stocks that are up 50 and 100% this year, and they're not going to move the needle on the index because their weightings in the S&P are so small.
So we do have an easing cycle. We have a weaker dollar. That's the backdrop. What are some of those sectors, those areas, those names that you do like in that environment?
Yeah, in this environment, you want to be in dividend payers. These are the most out of favor in 25 years since the year 2000. You want to be in those companies that have a lot of revenues and earnings offshore, okay, that when they repatriate, you get an FX tailwind for earnings. You want to be in cyclicals, real economy type of companies. And I think that's kind of where you'd be focused. Small cap versus large cap, international versus US. That weak dollar story helps international stocks. You're seeing this morning, the China stock, U.S. stocks are down on Powell. Chinese stocks are up 5-6%. Alibaba has been a big position of ours. It's gone up a lot. It's going up more. So the weak dollar is going to be the theme for the next couple of years, and that's how you benefit from it.
Tom, you got a year-end target of 7,300 relative to Friday's close. That's only 4.8% from where we are. How do we get there, and why do we only get there?
Yeah, I mean, you look at earnings growth is supposed to be 14%. GDP now is 5%. Why so glum, Tom? You've been a raging bull for 3 years. And the answer to the question is there are going to be surprises. There's going to be uncertainty going into the election. A lot of it's pulled forward with a 22 times multiple. If you think just about kind of rationalization of the multiple down to 21 or down to 20 times. And the biggest component of those earnings, Mag 7, the earnings growth is dramatically decelerating. So from 33% a year ago down to 14%. So that's going to take some juice out of the indices, so to speak, which are overweighted in those names.
The Polymarket odds-on favorite to replace Jerome Powell, former Fed Governor Kevin Warsh. Is there a bit of a mismatch between his history of commentary and maybe how dovish the perception of him is, given that the expectation is he is on the short list for the president?
Look, anyone that has a memory longer than 5 minutes knows this is a hawk in dove's clothing, okay? So this could be the surprise or the black swan, so to speak, that causes some mid-year volatility if he's selected as the Fed chair. I think that the bond market might like it because of his independence. I think the equity market's not going to like it because the equity market has a longer memory that this guy's a hawk.
How about Hassett or any other wild card candidate?
Anyone else is great. It doesn't matter. Anyone other than Warsh. I would say Hassett's great. Waller would be great. Bowman would be great. They're all kind of more moderate in their thinking, and their history supports that. They're not just saying what they need to say to get the job.
Why is right now a generational opportunity, as you say, to buy energy? What do you like for your energy names?
Look, commitments of traders, commercials right now are aggressively long WTI. They're always early and they're always right. We like the servicers, National Oil, Well, Varco, NOV. They've got $1 billion of cash, $1 billion of free cash flow. They're the leader in onshore and offshore drilling rigs, sales and service. They're going to be a big Venezuela beneficiary as well. This is a name we like.
Why so glum, Tom? No, I'm kidding. Not glum at all. The great Tom Hayes, chairman, managing member at Great Hill Capital. Come back anytime. Great to see you.
Thanks, JD.